It has been 7 months since Mbuvi Ngunze was appointed to head Kenya Airways. The cruise has been turbulent for the former chief operating officer, and this is evident with the airline's latest financial results ending in March 2015, where the airline has reported a full-year pretax loss of 29.7 billion shillings.
We did make a loss of 29.7 billion before tax. However, and it's important to emphasize this, out of that loss of 29.7, we have 13.5 billion, which are one-off items. In those one-off items, we have a 5.6 billion, an impairment adjustment. And as I explained earlier, the impairment adjustment is the difference between the market value and the book value of the 777-200s that we put out there in the market for sale.
This represents a 661% drop from the pre-tax loss of 4.8 billion that Kenya Airways reported for a similar period a year ago. The airline also posted a loss of 10.5 billion shillings for the year ended March 2013. But what could be fueling KQ's 3-year-in-a-row loss-making? According to Mbuvi, the slump in tourism is the main factor to blame by hurting passenger numbers. In addition, exchange rate volatility and competition, especially from Middle East carriers, as well as fuel prices volatility, are behind the woes that KQ is facing. Mbuvi says to avoid flying the airline into bankruptcy, the management has reached a deal with Afrexim Bank to act as a financial advisor and inject 20 billion shillings in form of a bridge loan.
Total overview funding structure and to advise us the long-term structuring of that funding, be it in debt or in equity. That's number one. Number two, they're assisting us with a bridging loan, so a short-term loan to fund working capital. And we have an agreement with them. They are a financial arranger.
This comes as the airline received a bailout amounting to 4.2 billion shillings. To raise more cash to finance KQ's operations and to keep it afloat, Kenya Airways plans to sell 7 aircrafts.
Given the new equipment that we have and the big investment, we would like to see a lot more utilization of this aircraft. We would like to see the generation of a lot more ASKs, because if you have a new asset, if you buy a new matatu, and you're only using it once a day instead of using it 5 times a day, it's expensive, because you want to use it as many times as possible so that you can be able to generate passengers.
KQ's management hopes that a re-entry into West Africa after the Ebola scare, coupled with lifting of some travel advisories by Kenya's key tourist source markets and increased foreign direct investments being channeled to East Africa, will help it return to profitability. Caroline Njenga reporting for Business Insight.